Hello, Mark Sturdy of 7 Days Ahead here with this week's multi-asset technical strategies, week of the 12th of October. And a glance at our summary page shows where we think the exciting markets are. We are interested in the strength of the dollar against the euro, sterling and yen, all the currencies. We're interested in the Nikkei. We're a bit cautious and flat in the other European and American stock markets, but the Nikkei we still think looks good. And we're out and out bullish of the gilt and the oil. Let's quickly look straight away at the these currencies. Top formations are being formed here, here, and a good rally going on, a weakening of the yen here. These are unambiguous breakdowns. If we go into the detail here, we have completed complex head and shoulders or double top, suggesting moves down to 1.1 in the dollar euro. Similarly in the dollar sterling, if we look more here we have it hasn't quite broken down in the medium term chart, but it has in the short term chart. There's a triangle here, continuation triangle. We think there'll be resistance up at this level, 136.68, or this bottom diagonal of the triangle, and we're suggesting moves right on down below 133.50, perhaps 132. And the yen, we have long been bearish of the yen. It's dithered around the point of breakout in the monthly chart, but it's now pushing ahead. It's pretty unambiguous in the weekly chart. We've broken up this prior high here and here, and this might be a rising triangle, I think, in which case that just moves up to here. And in the shorter term, we've got the short term breakup through these prior highs. So now the market has a succession of horizontals beneath it, a band of horizontal support on any pullback. So we are bullish of the dollar in all these three markets. Moving on to our one bullish stock market, just a quick pointer. The reason for pausing in these stock markets is this sort of price action. In all these stock markets, the S&P, the Euro Stocks and the FTSE, we have small short-term bear trends in place. But looking at the Nikkei, which we remain unambiguously bullish for, we have this fabulous long-term structure, which we think is driving the market up to 40,000. We have this slightly more complicated, but I think basically a trading range in the weekly chart. And in the daily chart, we have this trading range re-established. So we remain very bullish because of the long-term structure of the yen. The others we're far less sure of and uncertain about. Moving on to our other unambiguous stance. It is for higher yields, lower prices in the gilt. Here we have here's the breakdown of the very long-term bear yield trend. Here is the completed head and shoulders, which we think drives the market up to another 0.5%, 1.8 minimum. That's the weekly chart, and the daily chart we have, this is a price chart showing a market, a bear trend in price terms that doesn't show much keenness for retracement yet. We are very bullish of oil. The excitement there is we've had two prior months of closing above this downtrend resistance, well established since 2008. We have in the monthly chart a breakup above this band of resistance from prior lows, a point at which the market's already failed once, and we've broken up through that major breakout there. This month we have admittedly nearly half a month to go, but we're optimistic that that breakout will be sustained, looking at the weekly breakout through prior highs and the daily breakout through a succession of prior highs as well. The attempt to break back through that prior high failed dramatically. The market looks good in all time frames. We like the oil. Gold is a little dull. Good support at 17.25, but no prospect of breaking up through there yet. Thanks very much.